Hi everyone. Today I would like to take some time to go through the factors that I say might, help us come out of this very bad situation, maybe a little faster than most would anticipate. We're talking about crypto, we're talking about altcoins, and those are affected by the price of Bitcoin, and Bitcoin is affected by Nasdaq and the economy. So let's look at things more spherically from the beginning. Today, later on, in about 2.5 hours, we have Federal Reserve. The Fed minutes are being released, so we will know what the Federal Reserve has been discussing. Most of the headlines and most people hearing about the Fed's coming out, it sounds like bad news because of rate hikes. Okay, so we have the meeting today, and more or less, guys, we know what to expect. We know that the problem is inflation, so the Federal Reserve is increasing the interest rates. So before we go into the interest rates, we're going to talk about inflation a little bit, and I will give you the first factor that plays quite a big role in inflation, and that's high energy prices. Well, the price of oil got rejected at 120. It is now below $100. So, especially today, it didn't manage to break higher than 100. It got rejected there. And those are some very good news because it's quite different having to deal with the price of oil at 120, and it's way more manageable to deal with it at 100 or lower. Okay, there are a lot of articles out there. Some say we'll go back to 60, others say we'll go to 350. You can pick whatever you like. At the end of the day, I don't care. I look at the chart. Oil is below $100, and that is good news for inflation. Now, inflation, the only times that inflation goes down, that was 2008. It was because of crisis. Okay, so if the inflation is dropping, it means we have other problems. Okay, inflation went down because of the pandemic, the printing brought it up, and so on. So I have mentioned before that we might end up having a mild recession or a proper recession that will cause inflation to come down. So keep the number one, that's oil. Now let's go back to the interest rates because this is very easy to understand. You no need to look at the headlines and go with the sentiment. Okay, as a trader, you want to have your own sentiment, you want to have your own fundamental analysis, understand what's happening, and go to the CME group, the Fed rate tool, the rate hike tool. So 27th of July is the next meeting, and the expectation is for 2.25 to 2.50. If you go to May 23 or July 23, the end of 23, you will see that it is priced that the interest rates 33.3% will end up being at 3 to 3.25. Okay, so the vast majority is between 3 and 3.5. That's over 50%. Guys, there is only 1% or so that it will be less than 1%, and it will be more than 4%. And that's exactly what Powell said in the previous time he talked about interest rates, that, hey, okay, we're rising the interest rates, but they're going to go to 3.5. So, I mean, come on, guys, it's not a lot. It used to be 5.5 back in the beginning of the decade, and everything was was just fine. So rate hikes might have already be priced in, and today don't be surprised if we get a dovish statement. If you Google dovish versus hawkish, you will understand that the dovish statement is, hey, interest rates maybe not so go up. So oil is one, interest rates is two. I start to think that this talk about rate hikes is going to become milder. Now we have to look at the Nasdaq, and we have to look at the overall economy. Remember, this post inflation is high and the economy is good, everything goes up, okay? But we're talking about economic growth, about fears of stagflation, fears of recession. So I remind you that stagflation is when economic growth is down, the GDP basically, inflation is high, and the third factor is the employment. Employment, unemployment. If employment is good, then everything's okay. If unemployment is high, employment is not good, then that's a problem. So we had this post from May 19, we had these levels. If I click on play, you will see that, it did take an hold there. And I will show you another idea, the one we posted yesterday, so on. But in any case, economic factor, the economy as such will be playing the critical role. And that's why this Friday, July 8th, the non-farm employment change, the NFP, is going to be crucial. It's going to be very, very important. Okay. The next big report is the week after, where we have the CPI, the Consumer Price Index. That's the chart that you were looking at here. And personally, I expect to see the CPI dropping a little bit. So I don't expect to see something over zero point 0.6. That's my personal opinion that I get. I believe that it's coming to a point, inflation is coming to a point where it will give them at least a result which is smaller than the previous one, and the markets can use this in a positive way. So inflation could be coming to a turning point, and we could see inflation easing. Obviously, we had the headline news, inflation highest in 40 years in the US, in Germany, here and there. But maybe this is coming now to a level where we're gonna have a different situation. We're gonna say, okay, inflation stopped accelerating that fast, or stopped accelerating, and so on. And the one thing that can do that is if we have a recession. Now, what is a recession? A recession is when the GDP is negative 2 times in a row. And we did have a negative GDP on April 28. So the next one coming out in July 28, the quarter, if this one is negative as well on July 28th, then we have officially a recession, which is something that can happen. And if it happens, it should be mild, or cannot happen. We could have a slightly positive GDP, which means we have no recession. Employment very important on Friday. Next week, CPI, we might get some easing, which the market can take in a positive way. And the GDP, which maybe we will have a mild recession, maybe we'll have something positive. And when there is positive, if you put all this together, the market can start changing and the sentiment can start changing. And remember, the market is 6 months ahead of us. Whatever price you see now, it's a representation, it's an analysis of what the price will be in the future. They say 6 months, I say it's 4 months, okay? That's what I say personally, but they say it's 6 months, whatever. Now, there's another factor, that's earning season, which is coming up. The companies, are they making money? Are they not making money? The consumer sentiment is lower, so the spending must be affected. But if the major US companies come out with positive earning season, then that's another good thing. If they come out with a negative earning season, it can pull the indices down, and we can have a different situation. I don't know. Personally, in my area, I don't see spending being affected that much. It's more psychological. And in the US, I don't get a sentiment because I don't live there. But overall, I think that earnings season is going to be mixed. We're going to get some positive and negatives, and sometimes it's up to the media how they present it. So if they start presenting all these things in a more positive way, it's going to become better. In any case, I don't believe there is going to be panic. And we're going to talk about another factor which I believe is important, and it has to do with the news that Biden wants to reshape, to change, to take away the tariffs that Trump had imposed on China. If you don't know the story, in January 2018, Trump imposed tariffs on Chinese, okay, and that had a negative impact. Let me just show you. Composite index, it dropped 24%. This is it. This is the area here. You see, the stock market was up there and it dropped 24%. Nasdaq dropped 24% because of what? Because of Donald Trump imposing tariffs. Okay. By the way, this is a classic one. I think I'm gonna print this and maybe have it in somewhere in the office. Donald Trump, weak U.S. inflation. That's from back in 2017. And then later on, Powell sticks to rate hike message. It was, all that was happening, and finally Donald Trump managed to arrange for Powell to chop the interest rates down. And of course, the mind games with China, the tariffs, and all that friction. That was not a real war, but that was more like economic war. Right now, we have a real war. So I'm gonna come to that. Tariffs, trade wars against the Germans, against the Chinese. Angela Merkel is gone for good. Jinping is there, probably is there for good. Donald Trump, I don't know. He might be back, maybe not. I don't know what you wish for. Be careful what you wish for. But that was the war back then. It was economic war, and if you go back, it had to do with the tariffs and also had to do with the interest rates. So the minute that the Federal Reserve stopped increasing the interest rates, the stock market went up. Then we had the pandemic and the massive drop, and after that, the massive printing. That was the ultimate time to buy until recently that we have the Nasdaq having the correction, which, hey, it could be over and maybe it's not. For the time being, it is on support, and I do see support. So economic war we had then, tariffs and so on. Biden is coming after the real war with Russia and the schisma in the world economy. You have the BRICS forming up. You have all kinds of situations that they could escalate in a negative way. But we'll see what will happen in Ukraine and when this will stop, because it is affecting the world economy and it's affecting Europe a lot. It's affecting also, inflation and such. But Biden is making a move to bring peace with China. So this could be a good thing. It does sound like good news. And again, the markets will take all these things that are happening and they will make something good or something bad out of it. It's just you need to read the headlines and understand them the way you do. Personally, I am more optimistic at this stage. This is a chart that is most important to me. And that's exactly why I posted yesterday that I'm bullish on Nasdaq. Someone said I'm dreaming. Yeah, maybe I'm dreaming. Where's this guy? Anyway, nice dream. Yeah, okay. But anyway, nice dream. The trade is in the money already. Okay, and stop loss. Then hey, if Powell comes today, I use the word if, but I believe that Powell will be dovish today. I believe that Powell will come out and he will not be hawkish. He will not be the hawk talking about, hey, increasing interest rates and slashing down economic activity. I believe that he's going to be starting to become more dovish. He was the last time he talked, and the 3.5 doesn't scare me. Okay. Even if it goes to 4, it doesn't scare me. My accountant, I had a meeting yesterday. He said it's gonna go to 20. I'm like, what are you talking about, man? I mean, look at the real data. Don't be affected by what they tell you. Try to read between the lines and try to do analysis. Of course, no matter what happens, you lock me up in a room with no internet, no TV, no news, no friends telling me, hey, it's going up, hey, it's going down, hey, you know people around us affect us. I am affecting you right now, but I get affected by other people in any case. And I will leave you with this: no matter what happens, again, you lock me in a room, I lock you in a room without internet and without TV. At the end of the day, it's technical analysis, and we do have Nasdaq on support at 10,500. So maybe, just maybe, this could be the end. Don't be so scared. And I said it's the last thing, but this is the last thing. I have some of you, and this is something that I heard repeatedly in the last period. Professor, I lost a lot of money on altcoins, and because I lost a lot of money on altcoins, I switched to leverage and I trade futures now. because I have to make up. No, that's not what you want to do. What you want to do is you want to have income. Maybe it's time to find more income. Maybe it's time to get a second job. Maybe it's time to get a job. For some of you, first of all, everyone should have a job. I'm 46. I get up 4 o'clock in the morning, okay, and I trade the Asian market. That's work. So yes, don't be so negatively affected. Don't be so scared. And if you want to learn something from this, you should learn it. At the end of the day, go back to the chart of Bitcoin or other altcoins. Go to 2017, see what happened there. Don't sell yourself short. Start accumulating some wealth. It might be slow, but again, the same like Nasdaq, the same with Bitcoin. Personally, I cannot imagine Bitcoin under 20,000 for long. That's why the 18K, I called it the bottom ground. It was close to what happened. Then again, if you ask me in the very, very beginning of the year and end of last year, I didn't think it will go below 25, but it did. And of course, things change, the situation change, and we need to monitor the situation because the situation could be changing. The situation could be changing, and the Federal Reserve could be becoming more dovish. The inflation, maybe it's time that it can start, given that oil prices is low, it can start easing. The Federal Reserve, we know where they're going. They're not crazy maniacs that they want to destroy the markets. If there is one thing they want to save, it's the stock market, believe me, okay? The Nasdaq, especially, it's the flag on the pole. They're not stupid. So we follow the economic data starting from this Friday with the NFP. Next week, the CPI, which might not be bad news, might be good news. This one, okay, we will be here and trade it. And of course, the advanced GDP, which is the difficult, the most crucial one on Thursday, July 28th, because yes, the previous one was negative. And if we get another negative one, then we have a recession. Could be a mild recession, could be a big recession, or it could be no recession. We need to follow the data and we need to go step by step. The same with earnings season. I hope you enjoyed it. And yes, I'm gonna print this because I think it's like it's comedy and it's the markets, and that's the best thing to do about it. At the end of the day, trading should be fun, and trading should be for everyone to, why not learn how to invest, but do it in a responsible way, so you don't end up taking a shit like Donald Trump. Take care, everyone.